Hello everyone, Ben Sheppard here, CEO and co-founder at Silta. I hope you're all doing well. So this week's update is a little bit different. As you will have heard in my previous updates, we've been working on a new way to collateralize the loan pools that we use for facilitating debt to project companies that wish to take loans via Silta. So in this update, I'm going to give you I'm going to take you through a slide and sort of show you how Silta intends to work and what our developers are currently building. So I'm going to share a slide. Okay, there's my slide. Okay, so the journey starts over here. A project company wants to apply for finance. So they need a loan, $10 million. It's for a renewable energy project in Southeast Asia. So they submit an initial application. That initial application has information about the individual completing the application, some company information, and some project-specific information. It's very high level at this stage. The Silta due diligence officer reviews that application, makes sure that it's not garbage or spam that we're receiving. All things being equal, and it's a valid application. We will then present that application to our community and do a quick poll to see what the Silta community thinks of the project. Is this the sort of project that Silta wants to get behind? If it comes back positively in a poll, we'll then go back to the project company and say, okay, now we need you to submit a much fuller application. And this will deep dive into specifics around the project and the type of risks associated with the project, the type of financing that they need, the tenure, all sorts of different specific bits of detail that we need to inform our credit and ESG assessment. A score will be given. If this score is below a certain threshold, we'll just go back to the borrower and say, hey, I'm sorry, you didn't meet the minimum sort of benchmark, if you like, to be eligible for Silta funding. If it comes above that threshold, at this point, we'll then present it to the Silta DAO. And the DAO will then receive an overview of what the project is, our credit scores, our ESG scores, and the DAO will then vote on whether this is a project that should have a loan pool open for it, and importantly, whether collateral should be provided in the form of Silta tokens to be used in that DeFi loan pool. So very important role for the DAO now, because the DAO has this treasury of Silta tokens and they decide whether those tokens are used on as collateral for applications that come in through our solution. And obviously that if we need more tokens, the DAO can vote to mint more tokens as well as needed. So let's say the DAO votes positively. In this case, a collateral agreement is signed between the security agent and the project company. And we issue those Silta tokens into an escrow account, which are held there. So the project company never touches these Silta tokens that are used as collateral. They don't physically have it themselves. They're in an escrow account. Oh, sorry. The loan pool is opened. And we're working with a number of big DeFi protocols to do this. We're in deep discussions with one in particular that we intend to launch on, and there'll be a press release about that soon. So loan pool's opened. We need to raise our 10 million. So lenders come in, put their stable coins into that loan pool. Loan pool's filled. Silta collaterals put into the loan pool. The loan pool's then emptied with the stable coins that were put in. A loan's issued to the borrower. The borrower can then use that money to basically go away and build their infrastructure asset. And once the asset's built and it's in operation phase and it starts to bring in revenues, the loan will be repaid plus interest. Lenders will submit their LP tokens, get their investment plus the interest back out. And at the end of that term, when the loan's fully repaid, the Silta tokens that we used as collateral will be burned. If there's a default, which is highly unlikely in project finance, generally speaking. If you go and look at Moody's or S&P data, you'll see some statistics on default on project financing deals globally, and you can see it's quite a low risk probability, that's why banks generally like to invest in these sorts of projects. So if there is a default, though, what happens is the Silta tokens that are in the loan pool as collateral get liquidated. That repays the lenders, and the security agent pursues the borrower and basically gets the asset liquidated or uses whatever collaterals it is that we've specified in that loan agreement to get those Silta tokens that we lent to them repaid. The proceeds of that will then go into the DAO's treasury, where the DAO will then decide what to do with those, with that fee that's basically been repaid. So this is how Silta now can actually help all of the different DeFi protocols that want to enter real world markets get access to real life infrastructure projects. So this was it $250 billion plus market that we're looking at today within DeFi can actually access real world markets and be financing things that can, in some cases can make a material difference to the lives of people, whether it be a clean water project in Africa or, access to energy in islands around the Philippines, all of these fantastic projects that lenders can now be investing into through, basically this collateral bridge that Silta is going to bring to connect DeFi protocols to real world markets. Hope you've enjoyed this short update. If you've got any questions, by all means, send them over. There's going to be a blog about this. There'll be lots more information coming out about how we intend to do this. Thank you very much.